There are many indicators in technical analysis, but only a few can show you the trend, support, resistance, and even potential future levels, all in one glance. One of them is the Ichimoku Cloud. However, most people learn Ichimoku the wrong way. They memorize all the lines, all the names, and in the end, they still don't know how to trade it. The truth is, you don't need to understand everything to use it effectively. In this video, I'll show you exactly how to use Ichimoku in a simple and practical way. We will cover how to set up Ichimoku clouds correctly, how to read the Ichimoku clouds, real examples of using Ichimoku clouds on the charts, strategies of using Ichimoku clouds. If you want to learn how to trade the Ichimoku cloud the right way, hit the like button. Let's begin. To set up the Ichimoku cloud, go to Indicators and type I, C, H, then select Ichimoku Cloud. Once you apply it, your chart will look messy. Don't worry, this is where most beginners get confused. We are not using everything. We only care about the cloud. To get the clouds, click on the Settings icon. Go to the Style tab, untick everything except Leading Span A and Leading Span B. Now you have a clean chart, just the cloud. This is all you need to start understanding trend and support, just resistance. Most people overcomplicate Ichimoku, but the real power is in the cloud. So, how to read the Ichimoku cloud? The Ichimoku cloud acts as a dynamic support and resistance zone, not just a line, but a zone of pressure. If price is far above the cloud, it shows strong bullish momentum. Buyers are in control. If price is far below the cloud, it shows strong bearish momentum. Sellers dominate the market. If price is chopping inside the cloud, it shows a loss of momentum in the market. The market is indecisive. If price breaks through the cloud, it signals a potential trend change. But not all breakouts are real. Some are fake. The cloud is not predicting the market. It is showing you where the battle is happening. If you understand the cloud, you understand the structure of the market. Now that we understand how to read the Ichimoku cloud, let's look at a real example. This is McDonald on the weekly time frame. Notice how price spends the majority of the time above the Ichimoku cloud during this long-term uptrend. The Ichimoku cloud helps give us a directional bias of the market. When price remains above the cloud, it often signals a bullish trend. The cloud acts like a dynamic support zone, helping price continue higher during strong momentum. You'll also notice that during pullbacks, price often retraces back toward the cloud before continuing the uptrend. This is why many traders use the Ichimoku cloud to identify trend continuation opportunities. In strong bull markets, price often respects the cloud as support. Of course, no indicator is perfect. Sometimes price can temporarily break below the cloud before recovering again. This is why Ichimoku should be combined with price action, support and resistance, and overall market structure. Now let's compare this with a bearish example, where price stays below the cloud for a prolonged period. This is Polkadot on the daily time frame. Notice how price spends the majority of the time below the Ichimoku cloud during this long-term downtrend. When price remains below the cloud, it often signals a bearish market. The cloud now acts as a dynamic resistance zone. You'll also notice that during temporary rallies, price often retraces back towards the cloud before continuing lower again. This is why many traders use the Ichimoku cloud to identify trend continuation opportunities. In strong bear markets, price often respects the cloud as resistance. The longer price stays below the cloud, the stronger the bearish structure tends to become. This is especially important in crypto markets, where strong trends can last for months. So instead of predicting the market, Ichimoku helps traders stay aligned with the trend. So far, we've been using the Ichimoku Cloud to understand trend direction and market structure. But knowing the trend is only half the game. The real question is, how do you actually trade it? In this next section, I'll show you simple and practical strategies to use the Ichimoku Cloud. The first strategy is to combine Ichimoku with support and resistance. This is NVDA on the weekly time frame. Price is clearly above the cloud, giving us a directional bias that the market is in an uptrend. So instead of chasing the price, we wait. We look for a pullback into a key area. This area becomes powerful because you have a key support level. You have the Ichimoku Cloud acting as support, and you have multiple bullish candles showing strong buying pressure. This is what we call an area of confluence. When multiple factors align like this, it increases the probability of a successful trade. We are not relying on one signal. We are stacking probabilities. This creates a high-quality trade setup for a potential continuation of the trend. The second strategy is to combine the Ichimoku Cloud with multiple time frame analysis. Instead of relying on just one time frame, we use a higher time frame to identify the trend and a lower time frame to fine-tune our entry. Using the same NVDA example, we have the weekly time frame on the left and the daily time frame on the right. This area on the weekly chart is the confluence zone we identified earlier. Price is above the cloud. The trend is bullish. The cloud acts as support. Now this same zone corresponds to this area on the daily time frame. Instead of entering blindly, we wait for confirmation on the lower time frame. We draw a trend line across the pullback. Once price breaks above the trend line, it signals that momentum is shifting back to the upside. This break confirms our bullish bias that the uptrend may continue. This is where we look to enter the trade. The higher time frame gives direction, the lower time frame gives precision. The earlier you enter, the better your risk to reward, but also the higher the chance of false signals. If you find this helpful, please visit InvestorHubX.com for more lessons just like this. We are building a complete learning platform designed to help investors like you master technical analysis, stocks, cryptocurrency, commodities, precious metals, property investing, and more, step by step. You will also get access to custom indicators and in-depth video courses to support your learning journey and take your skills to the next level. To summarize, today we've covered how to set up the Ichimoku Cloud and, more importantly, how to read it. When price is above the cloud, we are in a bullish trend. When price is below the cloud, we are in a bearish trend. When price is inside the cloud, the market shows a loss of momentum or indecision. We also covered two simple strategies: support and resistance confluence, multiple time frame confluence. Trading is not about using one indicator, it's about combining tools to stack probability. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.